New year, new money and tax law changes. Are you prepared? Well, don't worry if you aren't, because financial expert Kevin Klug is here this morning to help us navigate through all of these changes. Good morning.
Good morning, Rachel.
Now, is this something we should look at every January if there's new things on the table?
Definitely, especially tax season's right here. So, that if it was one of your goals this year to save more money for retirement, you're in luck. Because now with increased contribution limits, you can put an extra $500 into retirement plans, IRAs and 401ks. And that's important because money adds up over time. Think of $500 for a 20-something-year-old over a 40-year period at 7% interest. That gives about a $7,500 value years down the road.
Nice.
Yeah, now for us to max out our contribution, that's a lofty goal, but it's an important one to get us ready for retirement. At Secure Retirement Solutions, we really work with retirees to help them stretch their money and make it last worry-free.
Okay, very helpful. Medicare Advantage open enrollment.
Yeah,
what's going on there?
Yeah, if you're someone that's looking to enroll or change your Medicare Advantage plan, this open period is for you. It started January 1st and runs through March 31st. And
so we have time.
Yeah, what you can do is if you want to change from one Medicare Advantage plan to another, or you want to go back to the original Medicare Part A and B and pick up Part D, this is your time period. Everything you do now changes effective July of 2019. And if you need help, we have Luke listed in our office, who is a licensed Medicare supplement agent to help people navigate this.
Okay, tax filing changes.
Yes.
I mean, the time is now.
It is. It's right here. First day to file was 28th, Monday. With the changes, this is the first filing season under the new Tax Cut and Jobs Act.
Okay.
One of the big changes was the standard deduction versus itemizing. Last year, in tax year 2017, the IRS reported about 46.5 million people itemized. That's expected to go down to about 18 million. The main reason is because the standard deduction changed. A married couple filing jointly under 65 last year was 12,700. This year it's nearly 24,000.
So to be able to meet that,
you've got to have a lot of deductions. But be careful, they took away the exemptions, personal exemptions this year. So you've got to work with your tax professional to find out, should you itemize, which path do you take?
That could be a big difference in the money you're getting back.
Absolutely, yeah, definitely.
All right. What other tax changes should we be on the lookout for?
Yeah, there's forms that changed and the tax child credit. Forms, they replaced the 1040EZ and the 1040A with just a 1040.
Okay.
It's designed to be simpler, and you still have to have it filed by April 15th of 2019. And the tax child credit increased from $1,000 to $2,000 for qualifying child. So if you don't qualify for a qualifying child, if they're between 17 and 24, you still could be eligible for a $500 credit. Or if you have an elderly or disabled individual, again, check with your tax professional to see if that individual qualifies.
And this is all based on, I'm just thinking, I'm going to have a 17-year-old, but it's based on last year's age.
18.
And changes. Okay, is anything staying the same when it goes to, because that's a lot of changes you just mentioned in a brief amount of time. Anything staying the same? Yeah,
when we talk about above the line tax deductions, your contributions to traditional IRA, HSA, health savings accounts, still there. Also for school teachers, $250 of unreimbursable supplies can be deducted. And anybody that has a college loan, up to $2,500 of that interest can be deducted. So there are a number of changes. If you need help, go to our website. I have a link, srsplans.com, to help you out.
Now, I know you have a lot of worksheets there. We have a little bit of time. It is the new year, and people are starting to, maybe that was their resolution, to set a budget. One or two things they should do today to get started on that.
The first thing you always have to do is, build up your emergency fund, have that first. And then if you have disposable income or investable income, you want to look ahead to your retirement plan. You want to put money away today. Like we said, a 20-something-year-old, they put away $500 this year alone. That's nearly $7,500 of future income. So a little bit goes a long way over time.
So work on your emergency fund. Then work on your long-term retirement fund.
Yep.
All right, good things to get started. Kevin, thank you so much.
Thank you, Rachel.
I put all that information on our website, fox11online.com. Also a link if you want to get some of those worksheets.